Good day, everyone. Today we will be continuing our topic number 2 under Conceptual Framework and Accounting Standards, which is about the Conceptual Framework. Conceptual Framework for Financial Reporting. So our objectives are as follows. First is to state the purpose, status, and scope of the Conceptual Framework. State the objective of financial reporting, identify the primary users of financial statements, explain briefly the qualitative characteristics of useful information and how they are applied in financial reporting, define the elements of financial statements and state their recognition criteria and their derecognition, and lastly, state the measurement basis used in financial reporting. So let's start with the purpose of conceptual framework. The conceptual framework prescribes the concepts for general purpose financial reporting. As I mentioned before, in CFAS, we will be dealing with general purpose financial reporting alone. So its purpose is to first assist the International Accounting Standards Board or IASB in developing standards that are based on consistent concepts. Second objective or second purpose is to assist preparers in developing consistent accounting policies when no standard applies to a particular transaction or when a standard allows a choice of accounting policy. And lastly, is to assist all parties in understanding and interpreting the standards. So basically, the conceptual framework is just there as a backup or additional or supplemental to your standards. Therefore, the conceptual framework, or you need to remember that the conceptual framework is different from your PFRS. So conceptual framework is not a standard. So therefore, when there is a conflict between the conceptual framework and a PFRS, of course, the PFRS will prevail. Now, in the absence of a standard, meaning there is no specific PFRS or PAS that is stated or that is mentioned, the management shall consider the conceptual framework in making its judgment in developing and applying an accounting policy that results in useful information. So that is when the conceptual framework comes in, when there is an absence of the standard. So again, if there is a standard, mag-una ang standard before ang conceptual framework. Next is the scope of the conceptual framework. So since conceptual framework is concerned with general purpose financial reporting, therefore, it involves the preparation of general purpose financial statements. Now, the conceptual framework provides the concepts regarding the following. First, we have the objective of financial reporting, the qualitative characteristics of useful financial information, financial statements and the reporting entity, the elements of the financial statements, which I know you are very much familiar already, recognition and derecognition, measurement, presentation and disclosure, and the concept of capital and capital maintenance. Now, numbers 5, 6, and 7, you'll be familiar with this more in your intermediate accounting, since in your IA, that is where there are already specifics that are mentioned, specific standards that are mentioned in connection to how you would recognize a specific asset, a specific liability, how you would do your measurements, either initial measurement or subsequent measurement, what applicable disclosures and presentations should you do given the following circumstances, and so on and so forth. So details of 5, 6, and 7 will be discussed in your intermediate accounting. So in here, this is just a overview or just a brief recap, or no, not recap, but just a short introduction about the following concepts. Next, let's start with the objective of your general purpose financial reporting. Of course, as I've always mentioned, or as I've mentioned before in our overview, your financial reporting or the financial information that the company provides about the reporting entity is useful to its primary users in making decisions about providing resources to the entity. So later on, you will know who these users are. And of course, as accountants, future accountants, the results or your outputs would be used by your top management or your decision makers in making necessary decisions or choices or action plans by the entity. Now, the foundation of your general purpose financial reporting forms the foundation as well of your conceptual framework. So again, it should be useful in making decisions. Next is the primary users. So when we talk about primary users, these refer to those who cannot demand information directly from reporting entities, meaning they solely rely on the financial statements that are given into them or that are available to the public. Examples of which include your existing and potential investors and lenders and other creditors. Because of course, as a potential investor, you cannot directly say to the entity na, oh, show me your FS or your detailed FS and so on and so forth. What is available to the public is what is available to the investors as well. Same goes with the lenders. So, what you submit to BIR, like the ITR and the like, maura pod na ang makitaan sa imong investors and creditors. Maura pod na ang ilahang basis if they would want to invest in your company or they would want to lend to your company. Now, only the common needs of primary users are met by the financial statements. Now, what are the qualitative characteristics that are needed in financial reporting? So these are divided into two: the fundamental qualitative characteristics and the enhancing qualitative characteristics. So under fundamental, we have further divided into two, talking about the relevance and talking about faithful representation. When talking about relevance, you have either predictive value or feedback value, and then it also deals about or talks about materiality, which is entity-specific aspect of relevance. Now, under faithful representation, it talks about or it made mention about completeness, neutrality, and free from error. Now, the second type is the enhancing qualitative characteristics, which talks about comparability, verifiability, timeliness, and understandability. So what is the difference between fundamental and enhancing qualitative characteristics? When we talk about fundamental, these are the characteristics that relate or that makes your FS more useful to its users. So it makes information more useful. Again, it should be relevant, it should be fairly presented. So that is when you can say that your information would be useful. Now, enhancing qualitative characteristics just enhance the usefulness of the information. So it doesn't necessarily mean that even if the information that you provide to your users, or they can still get something out of the information that you provide to your users even if it doesn't have that enhancing quality. So like for example, about consistency, diba? If you present this kind of report in this period and then different na siya on the next period, it doesn't mean that the user cannot get anything out of it. The user can still get something out of it. However, if the user tries to make a comparison, dihan na mo come in ang difficulty because again, you were not consistent. But still, makakuha gyapon og information si user. Now, if nagani ka enhancing qualitative characteristic o kato like consistency, the comparison or the comparability of your report would be very much easier for the user. So, ma-enhance na niya ang usefulness. But it doesn't mean that the information would not be useful anymore if wala ka enhancing qualitative. So, let's start with relevance. Now, relevance, I believe, or you already know when an information is relevant is when it can affect the decision of the users. So if there are changes or if there are changes to the information, meaning the decisions most likely will also change. Because again, there is an impact or there is a significant difference if there is also a difference or a change in information. So that is when you can say that information is relevant. Now, relevant information has the following, either a predictive value or a confirmatory value. When we say predictive value, from the name of itself, predictive, meaning the information can be used in making predictions. Confirmatory, the information can be used in confirming past predictions. So, muna siya ang relevance. Now, on the relevance is also the topic or the issue of materiality. So, I know you've already encountered about materiality in your accounting 1, diba? So, the concept of materiality is an entity-specific aspect of relevance, because again, one thing can be material for company A, which can be immaterial for company B. Now, when something is material, it can affect the decision of your users, di ba? So that is why materiality is important, or it can relate to relevance. When something is material, it is most likely relevant. So, muna inyong hinumduman. Next is about faithful representation. So faithful representation means that the information provides a true, correct, and complete depiction of what it purports to represent. Faithful represent Faithfully represented information has the following characteristics. First is, of course, completeness, meaning all information necessary for users to understand the phenomena being depicted is provided. That is why there are disclosures that need to be made. Diba? Community disclosures mo man ang imong ipakita or imong i-indicate or imong iingon sa or imong i-show sa imong mga users, diba? So, muna siya, having disclosures or adequate disclosures deals with the characteristic of completeness. Now, next is neutrality. This means that information is selected or presented without bias. Third is free from error, meaning there are no errors in the description and in the process by which the information is selected and applied. Because again, you are faithfully representing what really is happening in your company. So it should be neutral and it should be free from error. Next is the enhancing qualitative characteristics. So again, enhancing qualitative, this just adds to the usefulness of the information. So first, we have comparability, meaning the information helps users in identifying similarities and differences between different sets of information. So dito mo come in ang imuhang consistency. If there is consistency, there is comparability, diba? Next is verifiability. So different users could reach consensus as to what the information purports to represent. Meaning ilang ma-verify or ilang ma-validate kung unsa man ganina ang imuhang i-present anha. Next is timeliness, meaning the information is available to users in time to be able to influence their decision. So I know you've already heard of the statements of the phrases like it should be relevant and timely, because of course, unsa may gamit if na-expire na ito or panos na imong information, di ba? So, dili na makamake og decision ang top management pa ron. So, it should be timely, or so when you are asked to make a report and then given a specific deadline, of course, you need to follow that deadline because mo man na ilang gamiton sa pag-make og decision. So, kana siya. And then, understandability, meaning users are expected to have a reasonable knowledge of business activities and willingness to analyze the information diligently. Now, as to understandability, you need to make sure that your report is in a language that is understood by its users. So, siya. You don't need to use too much jargon because again, dili man sila CPAs parehas nimo, di ba? Or yung sila accountants parehas nimo. So, it's not, or you should always assume nga more basic knowledge ang nahibawaan sa imong mga users. So, mo na siya. You need to make adjustments if necessary. Now, let's talk about the financial statements and their reporting entity. The objective and the scope of your financial statements is to provide financial information about the entity's assets. Entity's assets, liabilities, equity, income, and expenses. So if you can remember, assets, liab, equity, these are the elements of your financial statements. Same with your income and expenses, di ba? So these elements are useful in assessing the entity's ability to generate net cash inflows and of course management's stewardship over its economic resources. Now let's talk about reporting period. Financial statements are prepared for a specific period of time, meaning the reporting period, and it includes comparative information for at least one preceding reporting period. So if you have already seen a audited financial statements, most likely kana gyud na gyud na comparison or duha gyud na ka columns class. One column for the current year, another column for the previous year para na ay comparison. So makit-an dayon nimo nga oh this specific asset increased or this specific liability decreased and so on and so forth. So kana siya na ay comparability. And then for a specific period of time, Philippines annual ang atong common na ginabuhat, diba? Or 1 year na period. So, muna siya. However, the company may wish to present or may wish to generate a quarterly or a semi-annual report. It depends on them. Next concept is the going concern concept. So, this means that your financial statements are normally prepared on the assumption that the reporting entity is a going concern, meaning the entity has neither the intention nor the need to end its operations in the foreseeable future. There's even a statement that going concern is an accountant's term of forever or an accountant's version of forever. So, mo na siya ang going concern nga concept. I-assume ni mo in the next years to come, magpadayon naghapon nag-operate ang business or ang company. Now, a reporting entity, or when you talk about a reporting entity, this is one that is required or chooses to prepare financial statements and is not necessarily a legal entity. It can be a single entity or a group or combination of two or more entities. Ano naman the reporting entity? There are instances wherein, for example, a conglomerate of companies, diba? Wherein only the mother company would be the reporting entity, and then ang iyahang mga subsidiaries or ang mga performances and katong mga elements of the FS of its subsidiaries kay si parent company na tanan ang mo report ana. So ma-encounter niya na ninyo sa inyong advanced financial accounting wherein kanang about business combinations and consolidated financial statements ingon ana. So basta communicate kag reporting entity kung kinsa ang mo report sa imuhang FS mo na siya si reporting entity nimo. Next is let's briefly talk about the elements of your financial statements, which I believe we've already discussed overview. So you have your assets, liabilities, and equity, which relate to your entity's financial position or your balance sheet. And then your income and expenses relate to the entity's financial performance or your income statement. So financial position, hinumdumi lang ang naana sa imong heading yun kay as of, then the date, while your financial performance is for a specific time period mo nang for the year ended, for the month ended, and so on and so forth. So, muna siyang difference. Let's briefly run through the definitions of all the elements. The asset, of course, is a present economic resource controlled by the entity as a result of past events. An economic resource is a right that has the potential to produce economic benefits. Now, the three aspects that you need to remember in defining an asset is, of course, first, the right, meaning you as the owner or you as the owner of the asset has the right to sell and not necessarily has the right to own or to sell, to use that specific asset. So, makaingon ka nga na kay right ana. And then, or makaingon ka nga asset na nimo siya tungod kay naa ka na right. And then next aspect is the potential to produce economic benefits. So this is when the asset is used para to produce another asset. Mura siya ingon ana ba? So like in the concept of inventory, di ba? Imong inventory, imo siyang itinda para na kay income, and then the income imo siya ipalit balik para mo imo siya ipalit balik og another inventory and so on and so forth, di ba? So kana siya mo na siya. Imo na siya may patuyok or may parolyo. And the next aspect is control, means the entity has exclusive right over the benefits of an asset and ability to prevent others from accessing those benefits. Now, liability on the other hand talks about your obligation. Now, obligation of the entity to transfer an economic resource as a result of past events. So, iyahang aspects is of course the obligation which is a duty or responsibility that an entity has to practical ability to or has no practical ability to avoid. Now, an obligation can be either legal obligation or constructive obligations. Now, when talk about obligations, you will learn that more in your Law 1 or obligations and contracts. So, muna siya dito. Next is transfer of an economic resource, meaning the obligation has the potential to require the transfer of an economic resource to another party, and then such potential need not be certain or even likely. What is important, therefore, is that the obligation already exists and that in at least one circumstance it would require the transfer of an economic resource. So, di ba kung mangutang ka class, na kay give up, napod kay makuha in return. So, ano siya. And then the last aspect is the present obligation as a result of past events. So a present obligation exists as a result of past events if the entity has already obtained economic benefits or taken an action, and as a consequence, the entity will or may have to transfer an economic resource that it would not otherwise have had to transfer. Now, let's pass through the executory contracts. So, kanisha executory contracts, you will learn that more in your law. Next, equity refers to the residual interest in the assets of the entity after deducting all its liabilities, meaning equity is your asset minus your liability. Let's move on to income and expenses. Income is an increase in assets or decrease in liability that result in increases in equity other than those relating to contributions from holders of equity claims or katong mga capital investments kana. And then expenses, of course, refers to decreases in assets or increases in liabilities that result in decreases in equity other than those relating to distributions to holders of equity claims or yung mga dividend payables kana. Now, let's move on to recognition and derecognition. So, the recognition process or recognition is a process of including in the financial statements or financial position or the statement of financial performance an item that meets the definition of one of the financial statement elements, meaning meets a definition of an asset, liability, equity, income, or expense. This involves recording the item in words and in monetary amount and including that amount in the totals of either of those mentioned statements. Now, an item is recognized if first it meets the definition of your elements and recognizing it would provide useful information, meaning it should be relevant and faithfully represented information. So that is when you would recognize a certain item. Now, as to the specific criteria, as I mentioned, ganiha, you will be encountering that in your intermediate accounting, or no, we will be discussing some of it, yeah, pero all theoretical. But ma-appreciate yun niyo about recognition, measurement, and the like if ato na sa intermediate accounting wherein you will really make computations or mag-solve na gid mo, di ba? And then, kanisha about relevance, the recognition of an item may not provide relevant information if, for example, there is uncertainty whether such asset or liability exists. Of course, again, dapat certain jud ka or probable siya. And then an asset or liability exists but the probability of an inflow or outflow of the benefits is low. So, dapat high iyang probability na nakay makuha nga asset or na na siya specific liability. Next is about faithful representation. The level of measurement uncertainty, and other factors can affect an item's faithful representation but not necessarily its relevance. So when we talk about measurement uncertainty, this exists if the asset or liability needs to be estimated. A high level of measurement uncertainty does not necessarily lead to the non-recognition of an asset or liability if the estimate provides relevant information and is clearly and accurately described and explained. However, measurement uncertainty can lead to the non-recognition of an asset or liability if making an estimate is exceptionally difficult or exceptionally subjective. So you'll be talking about estimates in your intermediate accounting or mo nang ma-encounter. Now, about the recognition, it is the removal of a previously recognized asset or liability from the entity's statement of financial position. Now, the recognition occurs when the item ceases to meet the definition of an asset or a liability. Next is about unit of account. So, unit of account is the right or the group of rights, the obligation or the group of obligations, or the group of rights and obligations to which recognition criteria and measurement concepts are applied. Now, as to the measurement, or another part is about measurement. Let's talk about historical, current value, fair value, value in use and fulfillment value, and current costs. So, historical costs of an asset is a consideration paid to acquire the asset plus your transaction costs. Now, a liability is a consideration received to incur the liability minus transaction cost. Nganong sa asset i-appeal ang transaction cost? Because those are the transaction costs that you will be adding are those that are directly attributable in you acquiring the asset. Sa liability po, same would apply. I-minus nimo siya if directly attributable siya. Now, historical cost is updated over time to depict the following. You have depreciation, amortization, or impairment of assets. Of course, for yung mga assets, collections or payments that extinguish part or all of the assets or liability, and unwinding of discounts or premiums when the asset or liability is measured at amortized cost. So, of course, dili man, for instance, if you will buy a machinery, dili ba forever nga ang presyo sa imong machinery kay 500,000 if imo na siyang gipalit like 10 years ago, di ba? Nabi tay time value of money, inflation, and so on and so forth. So, dapat should ka mag-update, ana. Next is about fair value. Kaning fair value mo gini yung kasagarang masugatan class, especially sa intermediate accounting. It always talks about fair value. So this means that the price that will be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. Next, value in use and fulfillment value. So value in use is the present value of the cash flows or other economic benefits that an entity expects to derive from the use of an asset and its ultimate disposal. So that is value in use. When you talk about fulfillment value, it is the present value of the cash or other economic resources that an entity expects to be obliged to transfer as it fulfills a liability. So, dili pa kayo ninyo ma-appreciate karon, but if nanon yung mga computations, diba, diha na yung pangitaon kung kano saan yung magamit ang value in use, kano saan yung magamit ang fulfillment value. Next is current cost. So, a current cost or the current cost of an asset is the cost of an equivalent asset at the measurement date, comprising the consideration that would be paid at the measurement date plus the transaction cost that would be incurred at that date. Now, the current cost of the liability refers to the consideration that would be received for an equivalent liability at the measurement date minus the transaction cost that would be incurred at that date. So, that is what you mean by current cost. Now, let's talk about entry and exit values. The current cost and historical costs are what you call as entry values. So, meaning, kung kanus na-happen ang kana na transaction, o kung unsa ang date, or kung unsa ang cost rather on those dates, mo na siyang imong i-recognize, diba? Now, fair value, value in use, and fulfillment values are your exit values, meaning they reflect prices in selling or using an asset or transferring or for fulfilling a liability. Next, what are the considerations that you need to remember when selecting a measurement basis? So it is important to consider the following. First is the nature of information provided by a particular measurement basis. Meaning, for example, measuring an asset at historical cost may lead to the subsequent recognition of depreciation or impairment, while measuring that asset at fair value would lead to the subsequent recognition of gain or loss from changes in fair value. Another consideration is the qualitative characteristics, the cost constraints, and other factors, meaning a particular measurement basis may be more verifiable or more costly to apply than other measurement bases. Now, measurement of equity. Now, generally, total equity is not measured directly because, again, equity is just residual. Sorry. Equity is just residual. So, meaning it's just simply the difference between your assets and liabilities. So, once ma-determine na ganin mo ang measurement sa imong asset o sa imong liab, automatic, ang sobra na niya is ang imuha na siyang equity. Now, because different measurement bases are used for different assets and liabilities, your total equity cannot be expected to be equal to the entity's market value, nor the amount that can be raised from either selling or liquidating the entity. Now, equity is generally positive, although some of its components can be negative. In some cases, even total equity can be negative, such as when total liabilities exceed total assets. So, these can be possible. Meaning, mahinubra na imong mga utang at hindi na makabayad imong mga assets, di ba, or di na makover. Next, let's talk about presentation and disclosure. Information is communicated through presentation and disclosures in the financial statements, meaning effective communication makes information more useful. Then, for it to be considered as an effective communication, it requires focusing on presentation and disclosure objectives and principles rather than on rules. It requires classifying information by grouping similar items and separating dissimilar items, and also requires aggregating information in a manner that is not obscured either by excessive detail or by excessive summarization. Now, presentation, disclosure, objectives, and principles. The objectives are specified in the standards. So again, it should be useful in making decisions. Now, the principles include the use of entity-specific information is more useful than the standardized descriptions. Again, most especially if you are in a specialized industry. So, nagin na yung mga specific disclosures that you need to make. And the next is that the duplication of information is usually unnecessary. So, kana siya imong hinumduman. And then, let's talk about classification. Classifying means combining similar items and separating the similar items. Therefore, offsetting of assets and liabilities is generally not appropriate. Lahi si assets, lahi gyud si liabilities. Under assets, lahi si current assets, lahi si non-current assets. Inana siya. Matarong jud mo classify. Next, classification of your income and expenses. Income and expenses are classified as recognized either in profit or loss or other comprehensive income. Now, aggregation, on the other hand, refers to the adding together of total assets, liabilities, equities, income, or expenses that have shared characteristics and are included in the same classification. So, example, tanang cash and cash equivalents. Sunod, tanang inventory, tanang property, plant, and equipment. So, kana siya, imo na sa ipang aggregate. So, kana siyang pasabot. Same with your liabilities, tanang accounts payable, tanang imong mga loans payable or mortgage payable, so on and so forth. Now, lastly is the concepts of capital and capital maintenance. You have physical and the financial. Financial concept of capital. This means that capital is regarded as the invested money or invested purchasing power. Therefore, capital referred here is synonymous with equity, net assets, and net worth. Now, physical concept of capital refers to capital that is regarded as the entity's productive capacity, meaning the units of output per day. Muna siya. And that would be all under the conceptual framework for financial reporting. This is still just an overview sa atong mga saksidi ng mga chapters wherein mo discuss na kita one by one sa mga different na account titles like cash, inventory, and so on and so forth. Dihan ninyo mas ma-appreciate ang katong mga recognition, derecognition, measurement basis, presentations and disclosures kay mas specific man to sa each account. So makita gid niyo ang differences. If you have any questions, please do not hesitate to please do not hesitate to communicate to me or ato sa group chat, diba? So, ano siya. I hope you understood and listened. Have a good day, everyone.